Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, you can find us at zinniawealth.com. Well, Mom used to say when you come home and say, I had a friend, his name was John, and John would have these crazy stories, and he'd tell me something, and I'd say to my mom, well, John says, and she goes, well, consider the source, Randy. John says, John wasn't always right on par there.
Yes,
some pretty crazy stories. Well, it's the same thing in the financial world. If you read a story and it's real pro-annuity, well, you probably are reading something from the insurance industry. If you read something that's really pro-market, you're probably reading or hearing something from the investment industry. Well, BlackRock is an investment company, and they manage $8.5 trillion, okay? Very market-driven. Well, they just released a paper saying, here are the things that you can do to have a successful retirement. And they're really surprising because they're not all real pro-market. First one says, delay your Social Security for the higher benefit. You wouldn't think an investment company would say something like that. They say, delay your retirement if you need to. Decrease your risk. You wouldn't expect them to say that. Optimize your asset allocation. I would expect that. And the last one was use guaranteed income products like annuities. So this is a really pro-market company saying not so pro-market things.
Yeah. What do you know?
Interesting.
The tides have changed, Randy.
Yeah.
I am not a huge fan of BlackRock, period, or anything ESG as of now. I am a fan of their sister company, iShares, because they have some really great exchange-traded funds. But I will tell you, it's interesting that BlackRock has turned a corner because they don't really make a whole lot of money in the annuity world if they were to start offering annuities. Yet, they are proactively talking about why they could be a good fit for your portfolio. So here we go. We're probably going to see BlackRock doing more in the annuity world, which is interesting. Yeah. And you know what it is, you guys? I think these companies have a forced hand. There's $925 billion in money markets.
Right.
Probably a quarter of that's probably going to go to annuities because bonds are having a hard time, because eventually people will move those dollars out of money markets when the interest rate environment comes back down, and they'll be looking for another investment. And it's probably not going to be bonds. We don't know 100%, but it's more likely to be some sort of annuity, a fixed annuity or an indexed annuity. But I'd be very careful not to go with a variable annuity. And that's more of a one-on-one conversation you can have with me, because there's a lot of fees in those. We want annuities that don't have fees. That's the key. So I think it's interesting because they're talking about delaying Social Security for a higher benefit in the future. We've talked about it in our class. Delay retirement if needed. So it's more cookie cutter. So they're not really diving into written plans or anything like that, but they're covering the basics. Decrease your risk. How do you do that? Well, you get out of the stock market and you look for these alternatives. Optimize asset allocations. We have been talking about that on radio for a long time, Randy, because the optimizing asset allocations doesn't mean a 60-40 portfolio. And I'm going to make the assumption BlackRock is coming to their senses and saying the same thing, because they would just typically say optimize a 60-40 portfolio. So they're spreading their wings and saying it a little bit differently. And then the last part, which was impressive, use guaranteed income products like annuities. A lot of people, when you say the word annuity, Randy, they just go, ew, my parents had one. I dislike them. Sometimes we just don't know what we don't know. I read a book, 15 years ago. And another advisor said, you got to read it. It's about annuities. And I'm like, no, I'm not really interested. They're a little confusing. 6 months later, like, did you read it? I went, no. They're like, please read this chapter, Sharice. So I read the chapter. I went, now that's a little different than I expected. So I did a deep dive. I did my homework for quite a few months. And I went, maybe they're not what I thought they used to be like. And that was perfect timing, because these annuity companies started evolving and giving more to the client. And so there's a big push for asset allocation for a part of your monies now to go into annuities. And when you listen to Fisher Investments, he's like, I would never have an annuity. I would never, die before I go into annuity. But You know what's crazy? the stock market goes down, that man still makes 1.25%. Stock market goes up, he still makes his money. And so in the annuity world, if you have investments in the annuities instead of bonds, you're not paying Fisher Investment that 1.25%, right? You're not dealing with the ups and downs of the stock market. So just be careful. There's going to be a lot of noise coming out on annuities. Fisher Investments will say things, other companies will say things. There's a reason why there's a push for them. There's a reason why the 401k companies across the country are now starting to offer them in your 401ks. There is something about safety of principle. There's something about that guaranteed income check. And now there's two versions of these annuities out there. And we want to maybe optimize one of them in your portfolio, one that gives you a guaranteed income stream like a pension, and one's just basically a bond replacement that's just going to give you a nice rate of return every year. So you have flexibility now. And then don't disregard that there's structured notes out there, but there's a timing to get into those. So again, BlackRock's one of the first companies to really do a shout out here to what we're talking about on the daily. Fidelity did one last year. It's getting bigger and bigger and bigger. And hey, by the way, I'm going to Yale to go interview a couple of finance professors that had been predicting the bond wave for the last 20 years and where it is today and these annuities. So we're going to get some really great detailed information on what their thoughts are, because don't forget, Yale, Harvard, MIT, they have some of the best endowment programs in the country, and we're going to be able to hear about what's kind of happening behind all this noise. And then the biggest question I'm going to ask is about annuities and what are we going to do with bonds? So again, it's exciting to see the investment world change. It's not exciting to see retirees not getting on board fast enough, because they are going to miss out on an opportunity, because in a year or two, maybe they're not going to be as classy. They'll still be valuable and viable, but you want to get in while the interest rate environment is really a showcase, because that's how the annuities shine the most.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 803-368-3680 or find us online at zinniawealth.com.
Sharice Rivers is an investment advisor representative of Zinnia Wealth Advisory, LLC, a registered investment advisor. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate, and when redeemed may be worth more or less than when originally invested. Financial professionals are not licensed in all 50 states. To find out if Sharice Rivers is licensed in your state, please contact their office. Zinnia Wealth Advisory, LLC is not affiliated with nor endorsed by the Social Security Administration or any other government agency, and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. Any client experiences discussed during this show are unique to that client. They are not meant to imply or suggest you will experience the same results. By contacting us, you may be provided with information about insurance and annuity products offered through Sharice Rivers, NPN Insurance License Number 8718011.